All right, let me make a video on when to invest. If you're looking for a simplified video, this is probably not it. It's more like a condensed video. And don't mistake it for a simplified video. If you don't understand the concepts fully, do not take any ideas and cherry pick. Oh, he said this sentence and forgot that sentence. So don't just like stay safe out there. This is some thoughts I had over the last couple of days. If Trump were not president, I might short Home Depot, but I will not because he's a construction guy, and I think he will try to kickstart the economy with infrastructure spending, and it's something that's very easy to get through the House as well. The Democrats, they will pass such a bill, and that might be great. That might actually be, this really needed. If you know, like the streets in like California, for example, are terrible. It's not enough money being spent on that kind of stuff last decade or two. I have a friend down in San Diego. He's a contractor, and sometimes he do subcontracting for the government. And then I know he does many of his purchases at Home Depot. So that's how I see Home Depot might make some money out of such an infrastructure spending bill. Yeah. So another thought I had was like, well, I don't know, maybe it's already happening, but there will be countries where people will start lining up to the bank. At the same time, it's funny because you have like the coronavirus. Do you want to stand next to people? Maybe the lines be extremely, extremely long this time because everybody's spaced like 3 meters between each other. I could see this happening. Italy is probably the case. I flew over to St. Bart's the other day and I met a lady on the beach, and she was so worried because she had all her money in Italian banks, and I'm like, well, I mean, she lives in St. Bart's for the winter. It's like I don't feel too bad about her. For her, I mean, if she lost 3 of her houses and she had to live with one, so be it. Sorry, I need some water. It's that Corona cough. Yeah, so the US was injecting $50 billion. Was that it? It's like, it's nothing. Like, why even bother? Like, literally. Ford, they have 140 billion in debt, and they will probably have to default on it. You know, it's not a good company. And there's probably another 20 like Ford that's like that big and has that much bad debt. And then on top of that, there's thousands of small companies that will have to default on their debt right now. My buddy down in San Diego, tons of rentals. He rents houses and apartments, and then he rents them from the owners, the whole place, and then he Airbnbs it in his turn. So he had to default on those $50K a month in rentals. So I mean, it's gonna start trickling. I've been very lucky so far on my moves, you know, like I've been doing this put option trading. I was doing good. I think it will continue, the good times for the put option trading, and I will tell you guys why. There's tons of ETFs out there with less than 5% yields. It's the high yield corporate bonds with less than 5% yield. It's funny because it's junk bond. It's complete trash. One of them even have the sticker junk. If you go on the stock market and you look and it says JNK, it's junk. They're not hush hush about it. They're telling the truth at least. I think ETF is kind of like, at least in this case, it's just like stupidity repacked as safety through diversification. ETF probably will be not as popular a year from now, 2 years from now. If you're a put option trader, I think the option trader hasn't found the high yield corporate bond market yet. I mean, they were probably a bit too late. I met one guy on the plane over to St. Bart's who's a short seller like me too, and and he was like shorting Tesla, and I was like, dude, it's not a bad one, but like in this market, like, yeah, it's a little bit like, you know, like it's a little bit like a riot, you know, like it's a riots on the street and everybody crossing the windows and runs in and steal things, and you know, you run into a jewelry store and you know, this guy, he steals the share, you know. It's like, dude, go for the high value, easy things you can carry, like the diamonds, right? But yeah, I'm sure he's still doing good. So yeah, right now what I'm seeing is that these guys, they haven't really found the high yield corporate bond market yet, or I'm wrong. It could be that too. I've been wrong before, not recently, and I've been very on track. But I literally don't rule that possibility out. I like corporation. I don't like municipal and government stuff. California is so underwater with the pension funds. I did that in an earlier video, but I wouldn't touch that stuff. I don't trust them. Politically, I think we see more acceptance with right-wing ideology. It comes with, many times it comes with hygiene somehow. It's always been that track over history, and order and hygiene been somewhat correlated to right-wing ideology, while open-mindedness and stuff like that been left-wing ideology. I don't think we go that far, like we see in China, you know, or like, you know, Japan or whatever, where they, you know, completely stop, or even say like Rwanda, you know, where like genocide went on, or South Africa, where they just during last year were really racist. The black South African were really racist to other Africans from Nigeria and stuff that came there to start businesses. I don't think it go that bad in Europe. I really hope it will not, because that will be awful, obviously. But I think they will close the borders. I don't think there will be much more immigration to Europe anymore. And I noticed that, you know, Soviet and Putin, they kind of created today's left as we know it, the cultural left. And it seems like the Chinese Communist Party has a pretty good grip on today's right. And so many times I hear people on the center right repeating the lies or the propaganda from the Communist Party as it was true. And it's a little bit worse. I'm not a fan of either the authoritarian left or the authoritarian right. I think they're pretty nasty, both of them. Yeah, so US federal debt will not grow like previous years, obviously. It's been growing and growing, and quantitative easings it will destroy the dollar. The debt will probably double this year. It will probably double. And I think when people start realizing that the dollar getting destroyed, they will run for gold and Bitcoin. And then if you want the leverage on the gold position, you buy the gold miners. If you want leverage on top of that, then you buy put calls on gold miners. So now you're super leveraged in a really good position in case what I'm saying happens. But I'm not giving you any advice, absolutely not. I'm just saying theoretically, right? So the common belief is that gold holds its value in crashes. So people were putting their money in gold a couple of weeks ago, and we saw gold price go up, and then it went down. I think it went down yesterday or day before, pretty much. And I think, like, if you go through history, it's just not true, the common belief that gold holds its price during a crash. I think that's a misconception the market has. They mixed up that with the fact that it kind of holds its value over time. Doesn't mean that it holds its value in the midst of the crash. I think gold is treated as an asset during a financial crash, and people need cash to pay off or service their debt during the financial crisis. So they have to liquidate their asset, and gold is in that case an asset. So that's why the asset of gold is falling. That's what I believe, and that's why I'm not even buying gold now. There's so much other opportunity that's better, and we're not there yet. Yeah, so that's the first step. And then the second step, and this is where they kind of get it right, that's that the monetary stimulus kicks in. And it's basically a devaluation of the currency. They started printing like crazy, they devaluating the dollar or whatever currency it is. And now people still have money, but it has to be a little bit bloodbath before and they sit in cash. Now they start running for gold to save it from inflation, also known as the devaluation of the currency, right? So I think that's where the misunderstanding arises from. And since we haven't seen that big death bubble yet, or they're not aware of it, I look like a little dwarf on this chair, and I have a beach chair here. I think we haven't reached a point where gold starts soaring in correlation to the currency yet. So anyway, I like you guys' comments. I got some comments on the earlier video here, and that's actually the whole reason why I make these videos, because I really enjoy the interaction with like-minded people. I noticed that I have like really smart friends in like business, and they start hedge fund and they do one thing after another, but they're not always believing the same thing I do on the market. And I think when I'm on YouTube here, like when I see your comments, it's like we're quite alike. That's my feeling, at least. And I love to hear their opinions and thoughts of you guys. And yeah, so Matthew here commented on a video before. Say you acquired an inheritance. Would you recommend getting involved with the stock market for a newbie to make this number larger? Very good question, Matthew. Well, so my thought on this is value has to be stored into something, and everything is a speculation in relation to everything else. If you invest in a house, then the house market can crash. If you invest in dollar, then the dollar can experience inflation. If you invest in the stock market can crash. And then the only safe haven left you have is like some financial knowledge together with a contrarian mindset and emotional state. So Stella asked the same question. It's the same thing. Like, is it the right time to cash out? Is it the right time to do this? If you're not contrarian, you're screwed, because you're just following the herd. So if you're like emotionally contrarian, when everybody's running that way, you run that way, you'll be fine. But if you're not, sorry to say it. So one thing I always had as a test, I noticed that test 2008, and I did it again in 2000. Was it last year when I went into Bitcoin? I tell people I bought. I didn't buy. This was just before I bought. I told people I bought, and if they were looking at me like I was some sort of idiot who went into the market at that time, then I know it was the right time. That's how you know. You go tell your financial advisor, your accountant, your whoever it is, anybody who thinks they know the stock market, and you say like, hey, I just bought tons of shares. If they look at you like you're an idiot, well, then you probably bought in the right time. If they say, oh, I think that was a good time, I think like now it's bottom out, well, then it's obviously a terrible time, because most people are sheep, so like probability is that they will be wrong is almost 100%, because like what is it, 1 in 100, 2 in 100 who are emotionally contrarian? I don't know. Okay. Yeah, I still hear people who buy. There's still some optimists out there. It decreases a little bit day by day, and I don't see any improvement on the horizon yet. I see like the cruise industry, which I was deep into, started out. It doesn't have that much room to fall, so I exited that yesterday, 2 days ago. Airlines are in focus. I went into them 2 weeks ago, to continue getting leverage, because like you you can't stay in one put option. You always have to move into the next. So you always have to be like 2-3 days before the market, maybe a week, but you want to be as close as possible. And my portfolio is like 25% airlines right now, and I think they can double, maybe triple from there, probably triple. But I triple is good, but this is the time to make money. So like sometimes you have to leave a triple for quadruple or something like that, right? I wonder how many people bought Trump's speech this week. I thought he was full of it. I think the crowd, the people, they really like a decisive, strong leader. But I don't think he was truthful. He said this is not an economic crisis. I think it's pretty obvious this is an economic crisis. And was it only me, or was he a little bit short of breath? I'm not saying that. I think he's a good guy. I literally think he's a good guy. I think he wants to do well for the market, but I don't really buy into it. Okay, so I don't think the stimulus will be able to affect this. It's just the biggest. We need to have the biggest leverage of debt, or we need to have something happening with the currency here. There's no more possibility with lowered interest rate to push the problem forward. There's 5. I brought it up in another video. There's 5 things that all come together that causes this to happen, and it's a little bit rough. So there were actually quite a lot of defaults already before this started, and now with the economic contraction, it's gonna explode. This was my I made a video February 23rd. You can check that one, and that one brings up those 5 unsustainable causes for the recession. And by the way, Joe comments on that video, and he what does he write? Oh, he acknowledges my accurate prediction. He writes, watching on March 12, 2020, have no idea who this guy is. I typed into YouTube how to make money off the coronavirus market crash, and I found this video. Sure enough, at the timing of this video, there were no cases in Italy. Now it's the second worst country behind China. So this guy has credibility to me. Thank you, Joe. I really appreciate when people acknowledge me. I think it's a little bit, makes me proud. But, it could have been luck. Do not discount for that. So I really think like the next big thing is high yield corporate junk bond. That's the next thing that crashed. It's gonna go just as bad as the cruise ships have gone lately. I rode the cruise ships down to the ground, and I have to jump ships, so to speak, to keep making profit. My portfolio started at $270,000 a month ago. Actually, it started like 2 years ago. It was 60,000 I put into a friend's startup, and then I made like 450, and then I lived for some money. I had about 275 left when I saw this opportunity, and if I had stayed in the cruise ships, I would have maxed out at 1.5 million. But because I jumped ship, and this is why I'm saying, like, because it's so important to jump ship in this option trading, I'm now up on 5.8 million, and I'm gonna continue to jump the ship because you don't get more leverage in the end. So what I did was I moved some of those into airlines, and moved some of those into airlines. What did I move else to? Sorry, I forgot. I also went against Hong Kong because I didn't go that much into Hong Kong, but I think that's a really cheap one. But I don't get enough information from Hong Kong. It's a little bit obscure to me, but I believe the capital outflow was already really bad because of the protest before, and I don't think they'll be able to defend their peg. I mean, their locked within a narrow band exchange rate between the Hong Kong dollar and the US dollar. I don't think they're their reserve. They don't really have a reserve, but whatever you would call it. Well, they have a reserve, but I don't think they will be able to defend it. And you know, it's been slow, but recently it's been waking up, and I think that one will. I think that one might crash. So yeah, I went into high yield corporate bonds. I'm not sure if like when this is gonna be found out by the market. It might be like this week, it might be the week after, but it's very, very close. There will be a lot of defaults, and I was super happy to pick up like one ETF, so cheap, called HYG. It's almost like the junk bond, junk one. It's just another one. I thought it was cheaper. I don't see how they don't get slaughtered in the next 2 to 4 weeks. I also have some bets on the downfall of Ford. Uber, not really a downfall, but like a contraction, and Sprint. That's pretty much my portfolio right now. Airlines, high yield corporate bonds, the HYG ETF, which is that HYG ETF. And yeah, especially Alaska. And I took that position at 250,000 last week, and now I think it's 1.3 million. And I think they can move down a little bit lower, maybe to $15 a share. Estimate April. I never do those very, very short expiration dates. I always like to do a little bit longer. I like to stay a little bit safe on that, because timing is everything. But if you're right, I don't want to get blown out, you know. I want to be still in the game. And by that time, when Alaskan Airlines hit $15 a share or whatever, you know, but when it feels right, I'll probably move to gold miners or even call options on gold miners. I have one in mind. I really like. So cheap. But now people are scared of them because gold keep falling. But that would be the perfect timing, because when the airlines have fallen down to 15, Alaskan Airlines, and I think I have Delta quite a lot too, then that will be in the same time as this big stimulus is, and that's maybe like 2-3 weeks before people start realizing, hey, this is not good for the dollar crash. And when the dollar crash, the gold goes back up, and that's when the calls on the gold miners will go, and I buy it's cheap. Right? Don't go in and buy them now, so I don't have any to buy. Keep this a secret. Yeah, so that's it, assuming he does he and the Fed does what I expect them to, and they start printing money and start throwing out money, helicopter money basically. I don't expect to see any short-term financing issues on gold miners, but that could be a thing. And now that could be a thing when the gold goes down. It could actually be a thing. That'd be really interesting. But I wouldn't be too scared of that. But that's still a thing, and that's also another good reason to wait a little bit. And yeah, a big cost for the gold miners is the oil price, and the oil price plummeted, right? I actually took some oil shares in Schlumberg like the day before. They quadrupled, and I was really happy about that, but I should have gone in way more. I see now. Schlumberg is a provider for drillers and such. They take I always like to take, if you see the oil market about to take a hit, see who's kind of leveraged on the gold, on the oil market, and then you leverage on top of that, and that's how you get like the really high returns. I think by that time, in a couple of weeks from now, when that start moving the gold, I think maybe the Bitcoin will start moving too. I will definitely go into Bitcoin. It might have good future, because many of the smartest people up in Silicon Valley still believing in it. There's a lot of speculators that left Bitcoin, but the kind of libertarian-ish, high IQ, computer nerds who program and do the smart stuff that makes us having all this cool technology. They really love Bitcoin, and whenever I speak to one of them, like the smart ones up there, they seem to work in crypto. So yeah. All right, that's pretty much it. Stay awesome, and thank you so much for watching.